Hello, we are Group Wake Up, having four members, including Ngọc Thạch, Ngọc Mai, Khánh Huyền, and Phương Anh. In this presentation, we will analyze financial performance of VIB. VIB, having its full name, is Vietnam International Commercial Joint Stock Bank. It's one of the leading joint stock commercial banks in Vietnam. On 18 September in 1996, VIB International Bank was founded. After more than 15 years of entertainment and growth at that time, VIB had 163 heads and transaction offices in a total of 27 provinces and cities across the country. In 2022, VIB Bank surpassed more than 40 banks issuing MasterCard in Vietnam and was the only bank to win 9 awards at the same time. This is the largest number of prizes in MasterCard history for a single partner. VIB is a bank with a very high retail growth rate and good quality. In order to fully meet the needs and serve customers in the best way, it offers diverse product packages for customers such as smart cards, savings accounts, credit services, and customer-specific products for enterprise goods. In the context of COVID-19 pandemic seriously affecting all aspects of social economic life, Vietnam's economic picture from 2020 until now still records some bright spots. It still maintains growth with an estimated GDP growth rate of 2.91% in 2020, and in 2022, Vietnam still achieved and even exceeded most of the basic macroeconomic targets set at the beginning of the year, with a GDP growth rate reaching 8.02%. The average consumer price index increased by 3.15% in 2022, which is lower than the set target that is 4%, thereby contributing to stabilize inflation expectations. One more highlighted achievement is digital transformation. Scientific and technological developments have achieved many important steps. Besides the negative impacts of the pandemic, it is also creating a push to promote the strong development of Vietnam's digital economy. Electronic payment increased rapidly with the value of payment via internet, mobile phone, and QR code increased sharply since 2020. I can say that Vietnam continues to achieve important and comprehensive results in most industries and fields. In terms of banking industry, despite the serious effects of COVID-19, credit activities achieved positive growth. Capital mobilization slowed down but was ensured. For the whole year of 2021, the credit balance of the whole economy increased by 13.47% compared to the end of 2020. Credit structure continued to focus on production, business, and priority fields. Monetary policy continues to manage flexibly and proactively by the State Bank of Vietnam, contribute to maintaining macro stability, controlling SBV, contributing to maintain macro stability, controlling inflation, and supporting business and people. Market liquidity was abundant, and interest rate decreased slightly and remained low. Banks continue to improve their capital adequacy ratio and apply international standards in risk management, in which more than 20 banks have applied Basel II standards. Moreover, with the speed of digital transformation, banks have the opportunity to control operating costs more effectively, which will facilitate the bank to get better income. And now let's jump into VIB's credit and liquidity management. It is pointed out that over the course of 3 years starting in 2020 to 2022, the VIB non-performing loan has nearly doubled. The percentage of bad debt was 1.72% 2.32% and 2.45% respectively, while loan loss reserve ratio typically declines after 3 years. It is account for 53.89% in 2022. This indicates that VIB has only 0.5 VND in reserve for every 1 VND in bad debts. And this gives us to a conclusion that VIB does not effectively manage credit risk when the bad debt ratio is large, that the reserve provision is just moderated. This impacts on the bank's earnings, liquidity, and reputation, and could potentially lead to financial distress. In terms of loan-to-deposit ratio, it has increased from 2020 to 2021 and decreased slightly between 2021 and 2022. It can be seen that VIB is not maintaining a safe level and is not doing well in this case. The index has increased over the years because VIB's deposit is increasing gradually. There is also a significant increase in the current ratio from 2020 to 2021. However, in 2022, it has decreased slightly to 0.76. This shows that VIB's short-term debt solvency ratio in 3 years is quite low compared to the normal ratio. And for later on, when we'll keep going for the next part.
Okay, in the second part, we will talk about the impact of capital, or we call the trend in the liquidity. We know that the liquidity risk occurs when a business or financial institution is unable to fulfill its short-term loans obligation. The investor or business could be unable to sell on the assets for cash without losing money and income due to the lack of buyers or an inefficient market. We have complied with VIB's latest figure of 3 years on liquidity as follows. In short-term debt, liquidity of VIB for loans under 1 month was almost impossible to pay because own value was negative and tend to increase gradually. In 2022, VIB has made efforts by concentrating on diversify its spending, credit operations, and access to capital markets. For long-term financial obligations from 3 months or more, VIB had a much better management ability. Almost figures were positive. Also in 2021, due to COVID affecting withdrawal, VIB's liquidity was slightly negative. This bank quickly remarked and boost the liquidity figures to positive, more than VND 9,000 million in 2022, especially for budgets over 5 years. VIB had achieved an impressive amount of positive liquidity that is more than 6 times higher than loan under 5 years and reached more than VND 82,000 million by 2022. In the next slide, we move to the interest rate risk management. From the table, we have gap for maturities under 1 month and from 3 to 6 months and 1 to 5 years in negative, while other maturities were positive in the period 2020 to 2022. Therefore, in terms of interest rate risk, these figures also show that for maturity of less than 1 month, 3 to 6 months, and 1 to 5 years, VIB profits will decrease if interest rates rise and vice versa. In addition, the net income equal dollar gap multiplied with the trend in the interest rate. Therefore, the graph will cause the relationship between trends in interest rate and VIB income to be inverted. As a result, in order for VIB to hedge risk, dollar gap must be adjusted so that the sign is the exact opposite of the change in the interest rate. Last but not least, the next slide will be hedging process. VIB uses a variety of derivatives to help customer transfer assets or minimize foreign exchange risk and other market risks as well as for its own business needs. We have three kinds of contract: currency forward contracts, currency swap contract, and interest rate swap contract. If we take 3 years to track based on the table, we see the notional amount of currency forward and swap contract are about double, while the interest rate swap contract witnessed a decrease by 3 times from 2020 to 2022. Derivatives are not risk-free through as they can expose a bank to other danger, like credit risk or counterparty risk. In order to reduce its risk exposure, VIB should truly examine the risks associated with this plan and have a defined set of risk management procedures in place. So to conclude, after examining VIB from a variety of management perspectives, its financial performance in the years between 2020 and 2022 fell short of the bank's expectation, and VIB will need to develop an innovative management strategy as a solid foundation for expanding its influence in Vietnam's banking industry. This brings us to the end of our presentation. Thank you for your listening.